Hey guys, wanted to try to do a real quick video this morning, give us some ideas where we're at in relation to price action. So for a gamma squeeze scenario, for the open, you generally like to see gaps above a major resistance zone. So that 41.7125 area is really critical resistance. I would felt much better about a big time gamma squeeze early on this morning if we were already tried to push out above that. We haven't quite done that, so be mindful of that. Could be a sideways chop day all day long today. Uh, quite quite plausible actually. That was the annual. That's the annual value area on the daily time frame using market webs. This is the annual value area from last year. Okay, so we're stuck still inside last year's value area. That's why it was so important that I show you that. Now on a weekly time frame, we're right here at this week's or last week's value area high. This was all built out off of last week's inventory. Basically, 70% of the volume happened inside of that range last week, and we're trying to push out above that, and we're holding trend support. So just be mindful of that. Uh, we can definitely break out. Like I said, we got a gap up here. Uh, be mindful there is a little gap up here that has never been satisfied during the cash session on ESs. So be mindful of that in today's trading. Okay, and so I definitely wanted to mention that stuff. Slash NQ. I want to show you the daily first. Show you how we are on the annual real quick here. Zoom in. I know it's a lot of garbly. Damn it. Sometimes it doesn't want to zoom right. There you go. So we are currently right above the annual resistance one. Okay, here on NQs. Uh, so be mindful of that. We've only had a couple days to get into that zone, but we are in a very compressed uh, pattern. So be mindful of that. Now this is a squeeze pattern, annual squeeze pattern. Okay, so you don't want to read too much into that. Now on a weekly time frame, what you're really looking for those squeezes are really tight ranges that you're springboarding off of. So last week we had a really wide range. Okay, and so that's not really the case. So you know, a lot of volatility last week, and now we sprung board up to R1. So in my opinion, it would be far better on a weekly time frame for us to build out sideways, tighten up our value area for a breakout move to the upside. So just food for thought going forward here. Some other things I'm looking at here on NQs because this is a leader, so I want to talk about it in depth a little bit here. Uh, so I'm going to zoom in here so far in this morning's session to give you some idea what I'm looking at here. And so uh, you see how this is my aggressive indicator for the daily markets. And so I'm just going to zoom in real quick here to this is what I do pre-market. See how that's starting to curve right there and bottom out? So you see this candle right here, that doji candle? I always I try to identify that every day, put that as a mark, and then I'll label this here in a little bit. So basically, above that line, I want to be bullish early on this morning, and below that line, I want to be bearish. Okay, so basically, it just keeps it really quick and simple. Easy way of doing it. I use the 5, 8, 13 on the MACD, and just try to identify whenever the down momentum shift and your moving averages are starting to turn, flatten out and turn, and line it up with some sort of doji candle if you can. And now you know for a fact that is a very critical area for the NQs. And I've already shown that we're at R1 on the weekly time frame. So be mindful of that. So bullish, bearish on the NQs. Okay. One second. So my take on the ES is here. You see how we come down, come down, come down. We bottomed out here. So we bottomed out at 3 o'clock this morning here on ESs. So right here is your support on your ESs. So if you do try to get in early on this morning, we are away from our support. Okay, in my opinion. So basically, you're taking the risk of all this downside action early on this morning. If you were to take ESs long based on my indicators. So a back test of 4150 early this morning is very likely. So I definitely would suggest thinking about that before you leap into any trades. Okay. Some other things I'm looking at right here. This was last year, 70% of last year's inventory on the Russell this morning. We're up at the 1760 area. So 1765.60, that just gets us into the bullish zone, into a normalized zone, trading zone. So typically, when you get above this area, that's by the dip. Typically from an annualized standpoint, and we are still below that, even despite the outperformance in the Russell this morning. So keep that in the back of your mind before you try to leap in these trades here. Okay. Now, if I go back down to the 1 hour on the weekly time frame, and a similar situation here, we're not breaking out this week to the upside. We are coming down from a lower base on the Russell. Russell really got hit yesterday. So yes, it's outperforming today. We're getting a short squeeze, but the breadth was just god awful in the markets yesterday. I mean, we were 2 to 1 and 3 to 1 negative versus positive on the breadth. So the diamonds and the Russell. It makes sense they're outperforming this morning because they got hit the hardest yesterday, and that's exactly what we're seeing this morning. Okay. So this is not a breakout scenario, even on the weekly time frame. So just be mindful of that, when you're looking at uh, the morning price action. Okay. So basically, if you want to be really aggressive here, you could always put a trend line right here. These double tops, that double top scenario. Uh, we could technically be breaking out of a double top. This and this. That's a very, very aggressive way of looking at things. So that's definitely something you could think about. Um, any other thing on a 2 week time frame? Yeah, I can't even do that either. So um, yeah, so yeah, no. So on the Russell this morning, you see on my MACD indicator, we started bottoming out down here. See where all these dojis are? So you can actually put a trend line right there. That's critical. That's your bull bear cross line for the session. Okay, that's another one that we have moved away from. Typically I want to be buying as close to that early morning signal as possible. We are well away from that. So, basically at this point, we do have a momentum bearish cross on my short-term indicator. So, this actually looks like a topping. So you can actually, on the flip side, duplicate. I'll change colors later on my thing. See that doji right there? See how we started rolling over right when that doji hit? So that's new resistance acting as so far this morning. So basically, you don't want to be bullish until we're actually accepting prices above this line in the cash session, and then you want to be bearish. You want to be leaning to the sideways to lower scenario because we've already lost momentum initially this morning. So be mindful of that. Okay, you saw me had to do this live, so you see how it's going on here. And then diamonds. I'm just going to use diamonds instead of the YM. The YM doesn't trade in that much. And if you zoom in here on the YM, here, yeah, let me go ahead and show you this first, and then I'll go over to my other charts. So, we have been in an uptrend, momentum uptrend for some time now. So my longer term, I don't even have a rollover on that, a sell indicator on that yet. So I got to go out bigger time frame. Yeah. So this thing started turning way back here, yesterday morning. So, and like I said, I tried to identify a doji to where that turn starts happening. So this is our new support now on the diamonds. So it looks like the dip buyers came in early on yesterday morning and started the uptrend, which has not shown any indications of coming off. So be mindful of that as well. So we don't even have any type of sell side signal even after putting at low end from yesterday. So be mindful of that. Um, you know, so uh, we do have a couple hours before the open. We might actually get my longer term indicator starting to flatten out, and we get some dojis up here. And we can actually put a different another line up here to trade against. Okay. I bring that up this morning. So we're at 334.70, 334.97. That's annual value area low. So even with this nice little move in the markets this morning, we are still not back into last year's value. So be mindful of that. That will act as resistance until it becomes new support. Okay, and we're still below that. So the things that are moving the most this morning are the most oversold. For a corrective pattern. And if you go over in 1 hour, and as you can see right here, last week most of the volume hit above us. Okay, that's suggesting there was liquidation happening from last week's. We had liquidation triggering above us here on the diamonds. Okay, and we have not gotten back above that, even in the pre-market session. So be mindful of that. That's a bearish chart. We're up this morning. We're trying to break out in the Qs, trying to break out in the S&Ps, but we're still below where they were liquidating last week. So be mindful of that. There was heavy liquidation in the markets, and we're currently trading below that. So got to keep that in mind. So on the bullish case, the strongest stock I got going on this morning is Tesla. But basically, we got a wedging pattern happening, a bigger time frame wedging pattern happening with Tesla. And to test the bottom of the wedge, you're looking at 176, 176.50 area. Okay, we have the potential to be going inside that wedge today, and that's 178.11. So we do have a breakout scenario here. I know a lot of people took Tesla overnight with the bullish scenario. So I am looking for a high odds scenario that we're going to see a change of character in Tesla today, and we're at least going to attempt to break back inside the wedge. Let me see if I can show you that wedge real quick. This is a little bit older chart, but we are currently trading above this VWAP line here on Tesla, and so definitely keep this on watch, or keep that on watch in today's session. And we're right here back testing this trend line. Give me 1 second here, and I'll draw it on my chart. Make sure know exactly where it's at. After spending a couple seconds with this here, 176.40 is going to put you right smack dab on that trend line. It looks like we're going to be opening right into it, or 176.70 area, something like that. 76.40, 176.70 area is going to put us right smack dab into those wicks. And I showed you using my market wedge the 178 area. So knowing these are wick areas, I could definitely see us doing 178 today, and then possibly coming back down. So we have to really get back above this to get us back inside of the wedge that we got, the wedge that's happened this year. So we're still outside that wedge, and but we are potentially re-entering the wedge today. So be mindful of that. Early on this morning, getting back into that wedge, it can be very powerful, because you see last time we got back into it, big short squeeze, a big rally off of it, that area as well, right through there. So definitely keep that in mind if buyers do come in here. Okay. Thanks a lot. I'm rambling too much. So I will see you guys trading.